Hi everyone, welcome to Single Value. So today we're going to look at MP Material Corporations. This is a company that merged with a SPAC recently at a base price of $10 and now it's around $35, so it's moved up about 3.5 times since that time. So in the space of several months, if you invested early, you would have made a really good return. The initial value, merger value was $1.5 billion and it is now at $5.4 billion. So the price has moved up considerably and the valuation too, which kind of brings the question, is it still worth buying into, or if you're a holder of the shares, is it still worth holding on to? So MP basically stands for Mountain Pass. This is a mine that was discovered back in 1949. Though due to restrictions in 2002, it closed for because of environmental restrictions and competition from Chinese suppliers. Though I'd say mainly because of the Chinese suppliers, because they're able to do it at a significantly lower price point. And of course, environmental restrictions don't help; they just add to the cost of mining, because you have to go by a certain method, whereas the Chinese suppliers didn't have any of those restrictions, hence why you're competing against someone that just has so many different advantages ahead of you. But coming into the situation now, we do have a situation where if you do operate with an environmentally conscious way, you do actually get a premium for the materials that you mined, whereas in the past it wasn't. And also, it's a matter of national security. Back a few decades ago, China was not the global superpower it is today, so there was no threat to the US. But now the US sees it as a threat, and if China supplies the world's, most of the world's rare earth materials, then I guess it's going to be a problem, particularly with the US. So there becomes a need to have your own rare earth supply, and hence why Mountain Pass is an important operation. Though it still has to be very competitive, of course. Like this was a mine that after it closed, it was brought up by Molycorp Minerals in 2008. And then basically the company tried to get this operation running. It raised $400 million to do this, but it still wasn't very successful. Back in 2015, it filed for bankruptcy. So yeah, basically there is a situation where, hey, this company can only succeed really if the pricing of the minerals is right, because you've had this mine closed down because it's not being able to be competitive in terms of a price point. But going forward, you can actually get a premium for your materials because you're more environmentally conscious the way you mine, and also it's a matter of national security. So the Department of Defense or something like that is more interested to buy off you rather than in the past where they were not too worried who they brought from. So hence why I see some really good things about this company. Though we still have to consider in light of that $5.4 billion valuation. Sometimes, as much as you like a business, you still have to look at the financials and they still have to make sense. Alright, so MP Materials, they own and operate Mountain Pass, the only scaled rare earth mining and processing facility in the Western Hemisphere. So hence why it just gives them such a good advantage, because they're large in scale, and basically it means they're the only one that really does this at a really good cost in the Western Hemisphere. So as mentioned, this was a SPAC merger with Fortress Value Acquisition Corporation back in November, and they raised $545 million. That's fully funds them to stage 3 of the business to restore the full rare earth supply chain to the US. So as we can see, stage 1 is complete, which is basically mining rare earth concentrate. And in the second stage, which is planned for 2022, they're looking to mine this material and then separate the rare earths into an oxide, and hopefully that extra generation in value allows them to earn more. And they'll have a target of 250 million in EBITDA by 2023. So you can kind of see where why this valuation has moved up, because in the next 2-3 years, the earning potential of this company jumps up significantly. So yeah, like that's, you're basically buying for the future, and at this valuation, you're really looking at holding for the long run. If you're not holding for a long run, like, it doesn't make that much sense holding at this valuation, because this valuation is pricing this for success in about 2-3 years time. And then after that, they hope to get into like magnet production, which is a big use case in electric vehicles. Though this is in 2025, so far away that it's just not as relevant for the situation right now. Though, you know, of course, we've seen companies go for large valuations based on, you know, future projections. So, like recently, we've looked at QuantumScape that has done extremely well, and that was basically a company with a long projection line that people see a large potential with. And I guess you can kind of see the same thing with MP Materials. Hey, there's no one else that's going to really have this large of a scale of rare earth mining in the US. So hence why this company has a significant advantage right now today and going forward in the next few years in the future. And with the magnet production, they hope to either buy a company that will help produce it or go into a joint venture. And but this basically sums up what's been around this about this mine. So a 70-year history, so from when it first started production, 1.7 billion of 1.7 billion invested into this mine since 2010. So as you can kind of see, like, there's a lot of money that's already been poured into this operation. So as you got to take into account that, hey, when MP Materials came in and brought this mine, basically they didn't have to spend so much money on building all these assets. They were already there, and they're getting them at, you know, pennies on the dollar, because this mine wasn't very efficient in the past, but of course they're bringing it back, and hopefully it becomes an efficient operation going forward. But obviously what they produce is in massive demand, particularly with the electric vehicle movement recently, that, hey, if electric vehicles are going to be important and they're going to need a lot of rare earth minerals, then this company becomes a very interesting company, and a highly valued one at that. So yeah, like, as it's put, stage 1, they become the largest ex-China producer of rare earth minerals, and then basically, and they're looking at about a 15% market share, which is massive in this. And in stage 2, which is where I see that large unlock of value, so hence why the valuation has moved up. It is all based on the future of the next 2-3 years, when they can get to 250 million in EBITDA. And then afterwards, it's nice that they have plans for the future to get into magnets. But of course, I think that's going to be, you know, that's the stuff that comes afterwards, after you're able to execute and actually go get things according to plan. As it says here, they're looking at that mining stage, and then they'll go through that refining stage, then the production phase. And yeah, as we see, that and the materials required to produce these magnets are found in more than 90% of electric vehicles, so it's incredibly important. So hence why this company has a few different factors about it going forward. Like, back then, electric cars weren't really being produced, but now they're going to be produced in significant volume. That demand for the material significantly increases. You have Tesla, GM, Ford, Volkswagen, Hyundai, Toyota, Rivian, and all those companies are looking for a large supplier. As Tesla's always emphasize, if you're a large supplier of EV materials, they're going to give you a large contract, particularly if you're an environmentally conscious producer. Hence, which these guys are. So hence why you could get something like Tesla, GM, Ford buying from you, because they know where your materials come from. They produce premium cars, and if you're buying a premium car, you want to know that the materials are being mined in an environmentally conscious way, and hence why Mountain Pass has a premium in this category. It also doesn't have that shipping cost. If you mine it in Australia, you have to ship it to the US if you're looking at supplying these companies. Hence why Mountain Pass has an advantage because it's based in the US. The transportation cost isn't as high as if you're trying to get it from the other side of the world in Australia to the US. And as it's put here, EVs are driving the growth of this increase in demand for these magnets. You're going from 710 million in value for this EV market for magnets to 10.7 billion in the next 10 years. So it's increasing about close to 15 times, which is a massive increase in the next decade. So Mountain Pass has a good future ahead of it, because as we've seen in the past, they didn't perform well because of environmental restrictions, but that's no longer a problem. Environmental restrictions actually makes this company more competitive, and it actually gives a premium pricing on their materials. So, and then also in the past, commodity pricing would have been a large factor that influenced this company, but as we see, there's going to be a large demand for this material. So going forward, the pricing is likely to be very, very good in terms of the materials this company supplies. And as we kind of see around the world, there's not really many rare earth suppliers. Majority of them are based in China. And then you do have Australia, which is looking into these operations. And then you basically have this one big scale supplier in the US. So hence why they're likely to get a premium. They're likely to perform well. As long as there's a good demand, which we know of EV vehicles, there is quite a bit of demand in this area. And it's also a matter of the management team able to scale this mine in a cost-efficient way. So as you can kind of see, they're looking at this massive supply chain, and they hope to fulfill every part of it along the way. In the next 2 years, they hope to start refining the materials that they mine out. Right now, they're not really a big refiner of their own materials. But in the next 5 years, they're looking at making magnets. Though, that's still quite a, I guess a long way in the future. But like as we see of QuantumScape, people might actually have an eye on the 2025 that this company will be producing a material that everyone will want to buy. And here's part about their predecessor, like Molycorp, the one that went into bankruptcy back in 2015. They were producing about 12,000 metric tons. And you have MP Materials currently producing 3 times the amount, so hence they're getting better efficiencies in their operation, and there's also large demand for this current material. So maybe they won't repeat what the past predecessor has done, and they've actually mined more, managed to get a better scale. And the same thing here in stage 2, they hope to refine much more materials than Molycorp did, about nearly 4 times 3.6 times the materials that Molycorp tried to refine. So I like the way the management team is thinking. They're thinking we're going to make this operation large, we're going to reduce our costs, and because the world really needs this material now, firstly we get a premium for what we do, and there's a large demand going forward in the future. And I guess same thing with magnets. The supply and demand is going to be increasing much more in the future. And as we look at quarter 3 results, this company has been able to increase their revenue to 41 million for quarter 3, and for the year to date 92 million, which is quite significant, and both increases from the prior year. So quarter 3 was at 41, increasing from 26, and for the 9 months, basically 92 million from the 52 million. So the operation has increased in terms of revenue, and the EBITDA is also pretty good recently, increasing from 11.6 million in quarter 3 to 4.5, and increasing from 24 million in EBITDA positive from a negative of 2.6. So yeah, like a lot of factors are moving in the right direction, particularly as you scale in your operation. You're able to get efficiencies that you didn't in the past. And as you see here, the volume that they're selling has in a sense continued to be, I guess, more or less consistent. I wouldn't say it's increased much, like you can see in quarter 3 here, they've actually produced less than the past, but the pricing they're realizing is quite a bit better. Like they were getting about 2,976 per metric ton, and in quarter 3 last year, and quarter 3 this year they're getting $3,393, and that extra $400 makes a huge difference, particularly with mining. But as you can see, with the biggest thing about this company is the production costs. So in quarter 3, production cost was $1,695. They managed to decrease this to $1,383. So not only is the pricing for the materials increased because they get a premium now for what they do, the cost of production is also decreased. As they scale this operation, they get more efficiencies. And I like what I'm seeing here, that you get lower costs and better pricing. So hence why things are working now. But if this ever reverses in the future, of course you got to watch this very carefully. Particularly with mining, these things change every so often. They come in cycles, and this company hopefully is in an up cycle, and eventually there, of course, pricing might be competitive in the future, particularly say like if Australian companies start to come in and try to compete with pricing, then we might have to like watch the pricing much more carefully. But it's a great factor that they have their production costs much lower. So I think that's all I really want to talk about in terms of the quarter 3 situation, and the mine itself. And I've just got this last slide basically, which talks about the projections from the company. So in next year, they hope to do about 171 million in revenue, which is a decent increase from the 102 that they expect for this year. But the biggest part is basically in the next 2 years, where they hope to scale to 345 million in revenue, and for 2022, and 415 million revenue in 2023, which is what this current pricing is pricing in for. It's pricing in for these large increases in revenue going forward, and also the increase in profit, that the earnings before interest, tax, and depreciation amortized. Next year it'll be 82 million, increasing to 172 in 2022, then getting to 252 million in 2023. So you can kind of see like the increases in their earnings just continues to increase significantly. So hence why the prospects of the company itself is actually very nice. And free cash flow, so basically in 2022 is when they don't have to invest so much into the mine, and are able to start making and generating a positive amount of cash for the company. And then hence after that, they've got extra cash to continue to expand and create more value throughout the value chain. So in terms of what we've just seen today and seen around the metrics currently, the big question is this valuation justified? Like, it's for the short term, it's definitely a very high valuation. Don't get me wrong, I like the operation itself. A lot of what they've executed so far is very impressive. But at this 5.4, you're pricing in for the next 2 years, unless they're able to get unless there's something else that they're not showing that they can show that they're going to increase more value. But in the next 2 years, you're looking at about 349 million in revenue, and then 415. So the revenue does increase, but not dramatically after that. So from 2021 to 2022, it does increase quite a bit. But then after that, it starts to flatline a bit until 2025, when they start to look at magnet production, which is where probably might be the game changer when they get into magnet productions. But that's so far away that it's probably not as much of the consideration at the current situation. So currently I think you're just people are willing to pay a premium because they like what this company does. But of course, if anything ever gets sold down, this company will be one of the very first ones to be sold down, at least in the near term. But of course, this 5 billion valuation might be, alright if you're looking to hold for the long run, particularly probably at least 2 to 3 years. Then you might see an upside. Like in the short term, it might still have some room to run, particularly with the sentiment around this kind of what this company does. But at the end of the day, commodity pricing is still commodity pricing. You're not going to get significantly larger increase in terms of your pricing. Like it might increase a bit more, but like I don't think they're going to get significantly higher than what they're probably getting right now in terms of pricing. The costs might lower a little bit, but even then, the current operation doesn't justify this kind of pricing. The future does. And at 5.4 billion, like if you're not willing to hold for the longer term, like it's probably something that you want to start reducing your shareholding. At least that's what my opinion is if I was holding into this company. I think the value isn't too, like the valuation isn't too bad. There is potential it could move to that 7 billion mark before it just starts to trend down, given the current sentiment. And that's the short term. And I guess the long term, it comes down to how well this company executes. If they can get to their 2022 projections, which isn't in the scheme of things isn't too far away, then they can potentially justify this valuation, or if not slightly higher, in 2 years' time. So it's a matter of are you a long-term holder? If not, then the current valuation of this company is it's pretty decent premium right now, that I ever see it moving up a little bit more, and then tailing off, particularly now that the financials just don't match up as much as the valuation, to be fair. And as I've seen with a lot of mining companies, like when the lithium boom was happening, I looked at so many lithium companies, because there was such an excitement around electric vehicles. And the same thing here. There's the excitement of electric vehicles is what's really pushing this company up in pricing. I think the pricing is high in general. Like, I like the business, don't get me wrong, but the pricing is high indeed. So it's either something you really want to just start to sell down and take your profits. But if you're wanting to buy in this company, I'd buy a little and maybe wait for the pricing to come down if it does. If it doesn't, it's not a problem. Just find a new investment. There's always more investments out there. No point paying for a high premium when you don't have to. I've noticed this video has gone on for quite a while. I noticed I just basically got really caught up in those facts and figures. Yeah, like let me know if there's any, if you have any comments or any questions, just post below. Until then, good luck investing, everyone.